Hello everyone, this is Evan here from the Trade Risk on Friday, December 9th with a weekend market recap video. We are first going to cover the current market environment, then we're going to move into some other major markets, sector analysis, and then finish off briefly with a few individual names. As a reminder, if you guys have not yet subscribed to our YouTube channel, please do so. Bottom right hand corner, we'd love it if you did. It just keeps you up to date with all of the latest content that we publish, also helps us get found amongst the other YouTubers out there, so I would appreciate that. Bottom right hand corner if you like these videos. Now, getting into the markets this week, S&P 500, very impressive week, up 3.11% in the SPY ETF, and in fact, all of the major US averages finished up north of 3% this week, so a very bullish session. Let's look here at the weekly chart. You can see it's tough not to like this, right? We're at all-time highs, and what's very important here over this past 5 or so weeks is that we've really convincingly sort of left this old period of consolidation behind. We've been moving sideways for multiple years, starting really at the end of 2014 and all throughout 2015, 2016. We had this brief period in July where we saw us trying to break out from this consolidation. We did make all-time highs, and then we went into this consolidation multi-month period into elections, and now finally we're getting that second leg higher back up to all-time highs and really sort of extending away into a healthy, convincingly trending market. And it's a different dynamic, and it's very encouraging to see if you're a bull and if you have positions on and are participating. If we go down to the daily time frame, you can see, just again, nonstop strength. All this week, we finished higher every single day consecutively. We started off Monday with a gap higher, and then we just basically moved higher on Tuesday. Really accelerated Wednesday, giving us the very convincing confirmation here. And Thursday and Friday was also a drift higher. Now, are we overextended? Yes, we are. We know this. We've talked about this many times now, that the strongest markets tend to stay in these perpetual sort of overbought conditions as people are forced to pay up to participate in this market. And while fear is up there of A, miss out in this rally, and B, just not believe this rally, that sort of creates this sort of vortex, this machine that is just kind of floating higher. Combine that with some seasonality, and we have this sort of perfect scenario where markets can climb this wall of worry higher. So with that said, will we see a pullback? Sure, we will. When it will happen, nobody knows. We are outside the Bollinger Band, as we mentioned. If you look at other metrics like percentage of stocks above 5 or 10 or 20-day moving average, you can see all of those are at sort of the upper echelon levels, ranges where we usually see pullbacks from. So that is all understood. That means you should be either more selective with new positions, and you should continue to sort of trail stops. That's at least the way I interpret these types of conditions. It's not a sell everything trigger. You want to stay involved in these sort of markup periods. These are the strongest periods of markup, and you really need to have at least a foot in the door here to participate. Otherwise, you will risk being left behind. The other sort of point I wanted to make here was last week we did put in a digestion week. We did nothing last week. In fact, we traded lower, and it was brief given the perhaps magnitude of the prior 3 weeks ever since the election, but it was still a much needed and healthy consolidation. We pulled back below the 8-period EMA, and this week we're sort of back off to the races. So again, 1 week of consolidation, then we're moving higher again, technically behaving sort of exactly what you would like to see in that sort of strong trending environment. So for us, the way we've been playing it, we came into the week pretty heavily long. We did buying in here on this dip last week. We didn't have to chase. We put maybe a position or two on Monday, and then we continued to just sort of trim ourselves out of some of those names that were running in our favor. We still have exposure on, but much less than where we started the week. So we've just been harvesting gains and continuing to trail stops. Even did do one new position on Friday. We'll actually talk about that in a little bit. Still sticking with it. We want to make sure we're involved. Understandably, we could have that pullback come at any point, but we'll have our stops in place, and we'll have those smaller position sizes to sort of get us through that period. If we start to move to some of the other major averages here, IWM So again, very similar comments here, just off to the races, weekly chart, right? Extremely bullish. This has had such a sharp move ever since this week right here, the November the 11th, and it just continued. Had that one sort of consolidation week last week, and now we're up almost 6% just this week alone. IWM was a position that we put on last week. We did some buying in here right around 131 and change that we established a position in the Russell 2000. And we did sell off a little bit of it this week, but we're still holding the sort of core position. We're letting it just sort of continue to work higher for us, and we'll continue to trail that stop accordingly. So we are long the IWM. And then the Qs, you can see back to the top end of this range, NASDAQ 100, right? Go to the weekly chart. You can see many months here, many weeks of consolidating sideways here ever since the start of August, and you can see we're finally got the highest weekly close that we've seen actually going back ever here in the Qs, and if you look at the composite, the NASDAQ composite, you can see we are actually breaking out to new all-time highs here this week, up 3.6%. So very constructive, all things considered. Let's get into some of the other markets, then we'll talk about some of the sectors that make this up. TLT, let's start there. Got hammered again here on Friday. It's relentless selling. This trend is still strong to the downside. We talked about this brief period of consolidation as, perhaps a point at which the bulls were starting to stabilize things. We could start to see a base kind of develop, and perhaps we could lift out of it in the coming weeks or next year or next months. But you can see we're still just not done. We're not done selling. We made new lows this week. So again, trend still remains strong down here. You can see, positive MACD divergence. So you can see some momentum sort of diverging here on the upside as the MACD sort of makes higher, makes higher lows here, and the price itself is making lower lows. So that is some sign that perhaps a bottom is near, but still certainly not convincing enough for me to take a signal just based on this alone. So you got to be careful here. You got to be very tactical if you're going to play this, or if you're trying to establish some type of longer term position. Perhaps you can start to build that in slowly. But for me, it's just a void. There's just way too many things that are working. Gold is very similar. It's been trading pretty much in lockstep with TLT. When TLT is getting hammered, so is gold. Also making new lows here on Friday. Tried to consolidate. MACD getting a little bit of a bullish divergence there, but still very rough shape technically here. You need a little more proof that that buyers do actually want some gold at these levels, so you got to be careful there. Silver, again, still the most constructive. You can see it did pop above the 20 period and starting to roll over a bit here on Friday, but this is this isn't making new lows. You get a little bit of positivity here out of silver. I'd like to see this continue. Maybe we get one more retest of the lows down here before it starts to eventually shape up and would be a better buying opportunity. For now, still just a wait and see, although I am noting the sort of outperformance there. If we go to oil, USO had a nice way to finish the week here with this 1.15% rally here on Friday. We are long USO. We did some buying on Thursday, this day right here. We get a little bit of follow through, just sold off a little bit of it on Friday. And we're going to look to see if we can get a retest of these highs up here. We know this is fairly stiff resistance, but if we're initially playing for a small target just to these prior highs, and then if we can actually do a breakout, that's going to be even better. But for now, we're just taking it one step at a time, looking for a retest up here. We're going to see how it acts, and then sort of adjust our position accordingly. But we're long it. Again, weekly chart of USO, you can see it had this very explosive 11% rally last week. We sold off a little bit this week down to the lows. I think we were off 3 or so percent. Then you get a little bit of a bounce here. So you can see the buyers are still sort of interested. There's a very sharp move last week. We're going to see if that can continue. That's the position that we have on right now. UNG doing a lot of dancing up here, and it's still just staying very, very resilient. Had this bearish engulfing day on Wednesday, but that proved to be really nothing, maybe just a little shakeout, because Thursday we completely reversed it, came back, closed near the highs, and then Friday we did finish up on the day. So UNG, this trend remains remarkably strong after just V-shaping off of this $7 level just a few weeks ago. So UNG very, very strong there. And then the US dollar, let's just take a quick look at that. You can see continues to kind of push higher here, coming into some resistance. These were the highs made in the past couple of weeks, but you can see some of the highest levels that we've seen going back to 2015. So very constructive here. US dollar putting pressure on a lot of those commodities, gold, silver, not as effective on the UNG right now, or USO even, but we'll have to see how that all shakes out heading into the end of the year. Now, looking at some of the sector analysis, right, we have our same leaders. XLF continues to just monster plow on to the upside. Industrials, same thing, all right. Materials, same thing, all to the upside. Even the discretionary sector also just kind of ramping higher. The sector that I think is a little more interesting is XLK. We've talked about this a little bit, put out some posts on the site on this sector about the potential rotation trade here and breakout. XLK is a new position that we did put on late this week, actually on Friday, as it started to emerge convincingly from this multi-month period of consolidation here. You can see ever since early August. Looks a lot similar to the Qs. Slightly different weighting, but very, very similar as far as the structure here. But you can, as you could kind of clearly see, the Qs, right, not really convincingly breaking out here. XLK, you can see getting that nice bump up. So this is a new position that we put on. I'm going to look for this rotation trade to sort of work. This is names like Apple, Microsoft, Google, Facebook, amongst others, but a lot of those big tech names, high weighting in this ETF. Semiconductors, a little bit of a kind of outside reversal today. Not going to make too much of it. Has been tremendously strong, but just going to note that it did close near the lows of the day, while most things close near the highs of the day. If you're really tactical, and this could develop into something you could take advantage of. But again, if you're in that intermediate long-term kind of trader or investor, then you may not even really care about this whatsoever. And XLP, actually huge ramp this week, particularly on Friday. Nice move here. So this had a 3% move, which is pretty big for XLP, for the staples. And again, this has been the unloved sector now for the past multiple months, and you can see with this little bit of thrust higher here, trying to turn the MACD positive on the daily chart. Something to maybe consider and look at, and just maybe realize the worst of the selling is over, although we still need to get a little more evidence of that. And even utilities here rallying while rates were rising on Friday. That's sort of interesting, as you haven't seen that divergence really play itself out recently. So XLU getting a little resilient there on a relative strength basis, based on where rates are. So keep an eye on XLU, XLP. They were certainly the most beaten up over the past several weeks, months. And finally, IBB, this would be in the laggard sort of by itself right now, just because it did have a positive day. It did gap higher, but it did sort of fail to hold on to the majority of those gains. So still just kind of struggling here in no man's land in the middle of this big range. Has more to prove itself before I could get really excited about it from a tactical momentum basis. Anyhow, in biotech land. So with that said, let's move into a few individual names. We'll keep it short today. Microsoft, talked about this one quite a bit. Put this idea out on the blog, I believe, last week, and this one's leading itself higher. All-time highs breaking out, helping fuel the Qs, or the XLK ETF that we looked at. Microsoft looking real good here as it extends itself to all-time highs. Google also looking good very quickly, this 3-day move as it cleared above the 790 level and then closed the week on the highs. Don't forget about this one. This one really just came back down, undercut the 790 level, which was prior significant resistance, and now we're trying to make a strong move, convincing move back above it. So I like it above $800. Keep that one on watch. Amazon Didn't really do much here towards the end of the week, just kind of flatlined in the middle of this range. Still needs to get, really back above the 790 level to get really excited about it. Otherwise, using Wednesday's low would be, if you're tactical and you want to try and play for a retest or to a trade back to the top end of this range, I could get behind that perhaps. There's just some opportunity there if you're really nimble, but just kind of sitting right in the center here. We'll have to see which way that rolls, either down or up. And Twitter also had a very impressive week, up 10%. You can see on the weekly chart here, just igniting itself above the past 3 weeks highs. That's constructive, but it's running right into this resistance zone, this $19.50 to $20 zone, where we've seen price fail multiple times. Briefly got above it from all of that buyout chatter, but really need to get confirmation next week if we can get more strength here to say that this isn't just a 1-2 week pop, then or 1 or 2 day pop. That would be a lot more convincing for the bulls. So we'll have to see how that shakes out there in Twitter. So that is the weekend recap. I hope you guys enjoyed the video. Have a great weekend, and I will talk to you soon.